Hey guys, John Hunter, your mortgage guy, back again with another update on rates this week for the week ending on January 12th. So, hey, welcome to Q1 2024. We're predicting rates is like trusting politicians. You just shouldn't do it because it's going to make you look stupid in the end. So, this week is no exception. We saw a little bit of a roller coaster. So 30-year fixed ended the week at about 6.25 to about 7%. 15-year fixed is about 5.5 to 6.5. FHA 6.125 to 7.125. VA 5.99. Hey, I think that's one of the first I've quoted in the fives to about 6.75 is what we're seeing. So now these rates can vary a little bit based on credit score, loan to value, loan type, loan purpose, being like refinance, cash out, purchase. Those are the loan purpose. Property type, there's just a lot of variables there. So if you have any questions and you want an individual rate quote, just let me know and I'd be glad to give you one. No obligation, of course. Don't need an application, just a quick conversation, and I'd love to give you one if you're interested. So keeping your thumb on the pulse on what it might mean to you. Anyway, this week we saw CPI, which CPI stands for Consumer Price Index. That's basically the price that consumers pay. We saw that come in higher than anticipated, just slightly. And really, what's interesting is what drove it. There's been a 20% increase in auto insurance, and that is actually the biggest increase since we've seen since 1976, which is interesting. The timing of this, because I've been helping my girlfriend shop for insurance, and it has really gone up. I mean, shockingly so. Not only for homeowners, but for auto. So if you have a renewal coming up, don't be surprised. Shopping around may not be a bad idea. So there's that. Anyway, so CPI was slightly higher for the week, driven by that, and the market went a little crazy. That was on Wednesday. Of course, it contradicts everything that the Fed decided to do as far as like slowing down, waiting to see what inflation does. It looked like there was a tick up in inflation. So, and then we had Friday come and producer price index, the PPI, not the CPI, but the PPI, which stands for producer price index, which is the wholesale price. This is what companies are paying for the products or the materials that they end up selling to consumers. So the producer price index actually dropped more than expected. So boom, we have this roller coaster this week. Friday basically made up for a week where the rates just kept going up. And then Friday, boom, right back. So really a roller coaster. And it makes sense really though, if you think about it, because the producer price index is the wholesale level. So if that's going down, that will eventually affect the consumers, right? What the producers pay for it will eventually affect what the consumers pay for it. So if it was the other way around, then that would be negative, right? If the producer price index was going up, it wouldn't matter what the consumers are paying because it's going to go up, right? Because it always flows downhill. So there we go. So that's the roller coaster that I've been talking about. And I do believe that that will continue going on in the first quarter at least. There's a fact that I've said many, many times over the years, which is when we see trends like this, we can expect them to continue until something shows it's going to be different. Well, this is going to be a little bit of a roller coaster, right? And I do believe that rates are going to drop. It's just not going to be in a straight line. And so that's the deal when it comes to prices. Prices always go up, just not always in a straight line. And rates right now, they're going to go down. It just won't be in a straight line. So timing is going to be everything. Having somebody who's got their thumb on it a little bit can help. That's what I'm trying to do for you guys. So come back every week. I'm going to be giving you an update, the latest and greatest, hopefully being as accurate as I can be. Predicting rates is a crazy game though. So it's all about timing. And this week is no different. So hopefully that trend continues next week. We'd love to see these lower rates. It's driving demand. We see an uptick. I saw on national, it said applications overall are up about 10%. VA applications are up 16. I don't know why the difference, but I do believe that's going to continue. That's going to drive prices up. So if you're thinking about buying, it's not a bad time because there's more homes coming on the market and rates are finally starting to get at least in the tolerable range somewhat. So anyway, John Hunter, I'm your mortgage guy, coming back to you every week with this info. I'll continue to do so. Please like, subscribe, and share if you will. And I will talk to you again soon. Bye bye.